What is going on, everybody? And welcome to a technical analysis video where I like to go through the charts with you once a week to kind of show you what I'm looking at as far as the technicals, along with my weekly analysis. The weekend analysis will essentially give you an idea of what I'm thinking coming into the week, and then the technical analysis allows you to see what I'm seeing, and then I try to line those with events to help manage my risk. And if you are a trader, I'm primarily a swing trader. So I do look for specific zones a lot of different times. I find it to be the most accurate out of all the different types of essentially techniques that are used to get an edge in the market. So if that sounds like something you're interested in, consider subscribing. But with that being said, let's go ahead and dive right in. So, as we can see, this is something I've been talking about for quite a while. Every time we are trying to hit all time highs, this market is just um, pushing it back down. It's wicking. And this is something I talked about way back in, I think it was 2020. Yeah, roughly right before we started dipping. And of course, as always, TD is going to be a pain in my butt, but something we've seen back here. I've seen a little bit back here, but the 2020s. This is still a daily. I'll pull up the weekly here. Yeah, back in 22, we've seen a lot of this kind of action. So every time we've hit all-time highs, that's not even as far back as I want to go here. Yeah, back in, I guess it was 22. It was actually here. I was right. It was 20. Correct. That is a correct answer. So back in 2020, one of the biggest things I've noticed before we had this massive in the pandemic scare and this massive sell-off was that every time we hit a new high, as you can see, there are wicks here. And these are monthly wicks, but living through that time, a lot of different times, as soon as it hit a new high, it would start wicking. You kind of see this action here a little bit, the first attempt wick, and then attempting to push up, and then just complete sell off into 22. So, and this is one of the worst technical, or not technical, but one of the worst tech falls here during this period in 2022. And so we're kind of, it looks like we're potentially breaking out here, getting ready for on the monthly here, actually, that we could potentially push up. So again, this month is going to be very critical. There's a lot of big events that are occurring, especially on Wednesday. Wednesday, we have core and monetary policy. Again, not expecting anything from monetary policy, but what we're really looking for here is Powell. We have Powell on Wednesday too. So really, depending on what he says, this monthly candle could flip pretty quick and start selling off. So that's what we're kind of watching. A lot of people are anticipating the rate cuts. This is why the market started pushing up, because Canada cut rates. But again, that's not going to really do anything. It's going to put more concern on what is potentially happening with interest rates and inflation. So we'll see what happens there. But interesting week. Again, we'll see how we finish the week. Again, what I'm actually expecting this to do is go sideways throughout the week. So we are kind of bottoming out here at the 53.28, and then we also have kind of really top being rejected at the 53.56. So expecting to stay within this range until Wednesday. Wednesday will be a big day. Like I said, we have core and we have Powell on top of everything. So if things do bad, we could potentially push back down to the 5,300. So that's a 20 daily support down here. We haven't quite retested that since we essentially broke back through this. So it'll be interesting if we do start selling off, we could potentially head to that level this week. Otherwise, we are still making new highs in potentially in price discovery. But again, it really just depends on how the news of events play out this week. Will be a big week. So again, the market's trying to price in some. It's not too crazy yet, but as things starts getting momentum, the expected moves within options are going to go crazy. So looking to see what happens there. But right now, again, I think we will pull back at some point, and we're kind of floating around that 5,300 right now. Again, that's a big critical level. If it does break that, then you can start looking more Really, the most critical level here is this level here, the 50, sitting around the 5,200. It's a long ways from where we're at, but again, if bears are thinking this thing's really going to get nasty, you're not going to get heavy selling until you break that level, and then you got a pretty big drop. You got about a 200-point drop here. I mean, from right now where you're currently at, it's almost a 200-point drop down to the 50 EMA. But once that breaks, then that could be a massive drop at that point. So we got some very strong support, and again, leading into election, you also have to understand they're buying about $2 billion worth of bonds a week, so that will help keep the market propped up till then, unless something really major happens with the overnight repo or anything like that. So which we are not expecting to happen, but it is always something that could happen. So this is why I talk about you should know what's going on in the market, because it helps manage risk, especially when your technicals look like this, where it's almost gone straight up. You definitely want to be careful when you're playing at these high levels. So we'll see what happens here, but as of right now, it's really on that teetering point, and rightfully so, again, because we are heading into a big week with again, Core and Powell. So, but we'll see how this is play out. But I'm watching those two ranges coming into this week. Let's take a quick look at Bitcoin. Bitcoin just been playing the zone. I've been talking about the zone for a while. It's essentially being rejected off the 53 and supported around the 62 mark. Expecting this thing to pull back at least one more time. And something I've talked about too, if again we start emergency rate cutting or anything like that, which could potentially happen in the next 6 months at any day. So you have to be mindful of that. But when it does, this would be a very critical level that it needs to hold. If it doesn't, I think we can get a dramatic fall, potentially down in the 45. Again, I think if it does reach this 45 zone, it's definitely going to not stay there for long, potentially wick back and find itself back in the 63 before we start heading up, because I do believe this will start heading up even further. But you have to understand, we have to get that price in a recession before we can start doing all that, and we haven't quite done that yet. And typically after the halving, you get about 6 to 7 months before you get into your true bull market anyway. So with that being said, again, you're still looking around December, early next year before you really start getting into the bull market, which in general, I think is when the market in general will start really pushing. But you have to understand as well as for that to even occur, again, I think we need a price in a recession, which means a lot of rate cuts because something major happens. We're not predicting a lot of that stuff to happen yet until something breaks. So gold, much like Bitcoin, which is kind of interesting to see, it's at the same kind of support level here. So kind of at a critical support here for gold. If it does break below the 211, could get some support here at the 200. But as of right now, kind of just chopping, consolidating. Again, if the market starts flipping and they start printing again, expect this to just start selling off again. I think the biggest support here is more around the 200 mark, because we've been essentially rejected from this for a very long time. We never came back and retested this. So that's really the level to be watching. So we still got a ways for this to break down. We'll see if it can continue to hold 212. But that's what I'm looking for on gold. And then let's get right into some stocks. Tesla, as always, I always talk about Tesla consolidating a lot. One thing about Tesla is that this massive move, it does this consolidation. You gotta love their charts because this is driving me nuts. But this consolidation is really nice. That's got going on here. It's not fun to be in this thing if you're trying to make a intraday play. But again, if you're like, this is a very long swing for me, because I, again, am anticipating FSD to come out and that to make a huge impact on the next couple of months. And then also you got humanoids, which I think will take place at some point in the next year or two. So those two things, again, that all dependent. We do have the results of Elon's package coming out here as well. So that'll be interesting to see, because if he doesn't get that, he's going to pull away humanoids and pull away AI, but they'll still have FSD. So that in itself, robotaxis in itself, will still lead Tesla into some crazy gains, in my opinion. But again, if you can get everything lined up where Elon stays for the next 5 years, even if he executes those options, he has to stay here roughly around like the 5 years for those to actually execute. And so if that does happen, I can still see him trying to get humanoids going. Again, the humanoids themselves are ready to go. It's more so just working on the AI and making sure everything is fine tuned for that. So as of right now, we've been playing this range really well, this 172 to roughly like the 182. You have a couple spikes that have come out. This thing may even attempt to try to ride back up to 200, which I'm expecting it here on the next earnings cycle, which starts in about a month. So just keep that in mind. It'll start July 1st, but you won't start getting your first earnings until about around the 15th mark, about midway through the month. And then I think Tesla probably isn't actually until August is when they might start reporting. So we'll see how that plans out. But which I don't know if that's what this is. They're expecting it late, midway 17. We'll see what happens there. But yeah, so it'll be really interesting to see. But expecting it to kind of play this range. If it does break out, again, if they report their delivery numbers and they do well, I think Tesla can really flip off that too. So you need to keep that in mind. Now, this is one I've been watching for a while. I talked about this one for a long time. Again, I've taken a position in here in SNO. I really like SNO, especially when it gets at these levels. It's held this support extremely well. So roughly around where we're sitting at, the 127. It's held, like I said, held. It's gotten down as low as 110. So this is, again, a longer swing for me. Again, these are monthly candles, so keep that in mind. I'm expecting this to at least try to push back up to that 200 level. So took a position this. So we'll see what happens over the next couple of months. This thing pushes back up to 200. Be a nice little piece of the pie if we can get it back up. And again, depending on the timing of this thing, especially going in earnings, it should get a nice little run up here. These are the kind of buys I like, the ones that are down on some critical levels. It's a solid company. I like to buy at these levels and then just kind of let it recover from that period. So again, I really like SNO coming into this week. I have a position already on this. And then again, just waiting for this thing to start pushing back up, at least to try to attempt to go for 200 again. And then we'll exit at that point, but we will see. Let's see what else we have on here. A lot of these are still, I'll go over GME just because it's been really crazy over the past couple of weeks. And as of right now, I can't really go off the monthly here because this looks like some craziness that's been going on. But so what we've had is, again, the first initial Roaring Kitty. This actually went up to 80 if you drop down the different time frames to look at pre-market. This thing was up to like $80 pre-market, and then it sold off to like 55 when market actually opened. But as of right now, this has been a pretty solid support, roughly around the 26. Again, this thing can drop at least down to the 17, so keep that in mind. And this is something you have to be very careful with GME, is the fact that it is a horrible company. So this thing can go all the way back down to zero. So if you are playing this, you have to understand whatever money you put into this thing, there's a high possibility you can lose it. So keep that in mind before you go slamming your whole life savings into this thing. I've been playing it with small amounts. I caught this move, and I also caught this move overnight. So the biggest thing is kind of just watching this $20 mark, potentially buying in small here. Again, understand that whatever you're putting in, you're okay to lose. And then ultimately understand maybe this thing does pump up to 100. We don't know. Just because it did before doesn't mean it will again. So you have to keep that in mind as well. I think the dilution of the shares are really what's causing these to sell off. So this move here, the next day they diluted shares and it fell down. Then they had this pop up. They diluted shares again. So they keep diluting shares. So it's harder to push this thing up. So again, we'll see what happens. But as of right now, that's what it currently is. I am probably going to sit the rest of this out. To be honest, like I said, I've caught these two moves. With all the hype and Roaring Kitty coming back. And then again, he came his first live stream in 3 years. So I don't know how much more. I mean, this thing could really explode, but I might do one more attempt. It really just depends on the momentum. I want to see how it looks this week. and then kind of go from there. Kind of see what Roaring Kitty is doing as well. It's going to be extremely important. His options don't end to the end of the month, so maybe worth playing at least one more time when it starts getting around this $20 level. Get into this financial advice, and again, it's extremely hard to move in and out of this stock. You have to keep that in mind. If certain brokers won't even let you execute on this thing, options are extremely hard to get your hands on. And when you do, wherever they execute, your options are going to be a pain as well. I know even with stock, the way it executes, you get a lot of slippage. Even if you put essentially a limit order, you have to understand with them halting the stock, there's a lot of slippage. So again, this isn't for some some people new into the market and think you're just going to slam in your life savings and everything's going to be okay. And that's the big problem too, is that this thing goes up to 100. They can just not execute your trade. You'll just have to continue to hold on to it. You have to think about all the different scenarios. So again, you have to be very, very careful in here. Whatever you put in here, make sure that you're okay losing and it going to zero. But yeah, so I just wanted to bring this one up. Again, there's not really any kind of technical patterns here. There's some good levels here, but again, aside from that $20 mark, again, it could pop up higher. We don't know, but again, they keep diluting shares, so I wouldn't really expect this thing to go up to 200,000 because of the dilution of shares. So another big one, I bring this one up all the time. I do really like PayPal as well. It's been playing this range really nice, essentially from the 67, roughly. Right now, it's had this new support around the 62 mark. Really like it again, back under 60, but I don't know if that's going to happen, especially with the new CEO. There's a lot of positive sentiment around this company right now. Once I think everything changes as far as rate cuts and everything, I think this thing will start exploding. So hoping for one more dip and then buy into this one as well. So really watching this level. If it can get to 50, that'd be fantastic, especially if you start pricing a recession. But again, this thing's already been beaten down quite a bit, so I don't really know how much further it's going to go down, much like Tesla. Tesla's has been beaten down a lot, so we'll see how much further it can push, but we shall see. And then another one, I want to bring SoFi up. Again, this company, and I want to preface this one by saying you have to be very careful because we start pricing in a recession. Any kind of financials are really, really going to get hit hard. This thing, I think, can go even lower, so you're going to have to keep that in mind. But it has this very nice base, roughly around the 670 mark, which is really nice. It is also kind of wedging here, which again, I don't like playing these too much, but as of late, they've been playing okay. So it might actually be a pretty big move. I might actually take a position in this for this thing to break up. Again, it reclaims about 75% of the move, so roughly around 931, we could potentially get a move out of this. So this may be a big play I might be watching this week. But again, trying to grab shares roughly around here, around the 688. See if this thing breaks out, potentially even 10, especially going in earnings. It might get a nice little pump. But again, it all depends on timing and what happens. But I do like SoFi as well this week. And then, of course, BA is another one we always watch just because it's a leading value stock. And it's recovering as of right now. It's kind of getting back in that range. This is the real golden range right here, roughly between that 220 and this 200 mark. It's been essentially consolidating here for a long time. As of right now, it's been kind of having this weird consolidation, wide gap between 200 and roughly around the 166, especially with all the bad news. So I had this kind of speed bump here as well, roughly sitting around the 180 mark. So do keep that in mind. So like I've always stated, I mean, this stock doesn't make any sense. It's a bad, essentially just their designs and the way the company's being run. I mean, it's a bad business, but again, it's supported by the government, so there's you really didn't get much of an option. This thing will continue to stay afloat because of the government's. But we'll see. I mean, during the pandemic, this thing got all the way down to 100. It held 100 really well. But as of right now, it looks like it's attempting to make a new high here and a new higher low. So we'll see if this thing starts building momentum back up. It looks like potentially build that back up. But again, that's something I particularly trade because you can get faked out a lot. And with the bad news that keeps coming out, I think it starts selling off. So, and then JPM, I was always still messing with around the all-time highs. Did sell off a little bit, and this is like I've said before. You want to be really careful with the financials because if they start cutting rates, the banks are really going to take a hit. So just keep that in mind. As of right now, the only reason it's as high as it is right now is because of what is currently going on with the interest rates. And JPM is prime. There really isn't no second best compared to JPM, right? JPM is a monster as of right now. So we'll see what happens here. But as of right now, your top range is kind of roughly sitting at the 204 and supported roughly around the 196. It's actually could have that as a separate zone. It could refine this a little bit better, especially on the 1 hour. Like I said, like I've really done, I don't really trade banks, but to refine this, you can definitely get this in the 1 hour and make even like these smaller zones here and then play this intraday. It's kind of how I do a lot of my intraday plays is I like to take it on the 1 hour and then break it down in these smaller zones. But like in the grand scheme of stuff, I like to always look at the higher time frames and kind of see where we're headed, and then trying to navigate to those targets and those zones. And then again, intraday plays, if I want to intraday play it, which I typically play SPX a lot more than anything else. There's also tax advantages to that as well. But nonetheless, yeah, so that's pretty much what I'm looking for this week. Again, there really isn't much else. Another potential play, I should say, I'm kind of looking at Johnson & Johnson. I like where it's currently at, especially if it can dip back down here to the 144 mark and try to get some recovering. Again, everything's going to be hit hard just because of interest rates. Again, depending on how quick that's going to recover, your tech's going to bounce back a lot quicker. But again, this could be potentially a nice play to recover some. Again, it has a dividend as well. So while you're holding this and it's chopping, you at least collect dividend until it could potentially pump back up to some of these other levels. So like the 162 or whatever. People like playing value more. So if you're in a value, I'd be looking again, like I said, 144 entry for this. And then again, realize this thing can dip even lower, especially if we start getting panic with a recession. I don't know how much lower these things can go. A lot of these are really beaten down already. But we will see. Nike is another honorable mention. That one is not Nike, but if I could find Nike on here, which I'm pointing right at it. So this level here, if you get anywhere essentially around the 92 mark, could be a really great buy. Again, we're at some really good levels here. So as you can see on the weekly, it does look better as a potential swing trade. Again, it does have a dividend. It's not the best dividend, but the nice thing is it's at a really nice support. So if it does recover, again, if you like value, your first target would be 126 from where it currently is, and then potentially even 180, even higher once things start doing better. But again, I do really like. Another potential problem is this could be a reverse cup and handle here. So this could potentially actually start selling off even lower. I don't play the cup and handle, but a lot of people do. And yeah, that could be concerning. It didn't look like it was really much of a cup and handle. This actually looks like it's kind of wedging more than anything else. Much like SoFi, looks like we could be getting a nice little breakout to the upside here. So again, that could be one you could be playing as well. If you like Nike again, I like great business models support this, especially when you start getting around the real critical supports like this. It's great to buy in. Again, you have to also understand institutions know about these levels too. So could dip a little bit lower. Maybe you see 72 briefly for a couple of days, maybe a couple of weeks, and this thing might start breaking back up. Again, all depends on the events. This is why I pay attention to the events because something triggers the events, right? Like inflation is going away. Like we have a great inflation report. We start talking about more cuts. right? All this can start fueling these things. The money printer turning on, that could start fueling these things to start pushing up. But again, that sentiment, and that's why I just have a separate video, because it gets more into that kind of stuff compared to these technicals. But when you're matching these up, that's kind of what you're looking for, is a great company that has a lot of free cash flow, has a great brand behind it, can recover from situations like this. And so, again, another good setup we got here. So again, the big takeaway for this week, again, I still really like Snow. I really like SoFi and Nike. I think got some really great setups. Tesla has a really great setup as well, but that's going to take more time, which I believe these last three will have a quicker move to the upside until interest rates change, and then I think Tesla will start leading that pack and not be suppressed like it has been for the past probably about years. So, but that's everything I have. So if you made this far, I do appreciate it. Go ahead and drop a like. Again, none of this financial advice, and I will see you guys on the next one.